All right, morning to you, Jerry. All right, good morning to all of you guys. Today is the 5th of July, not 4th of July. I make a mistake in the dates, all right. All right, 4th of July is still the America date. 5th of July is Singapore date, and we are right now on the 5th of July, Monday. Okay, all right. Today is a very special day for the Americans because it is the Independence Day. All right, they're still celebrating it, okay. All right, just let me do something here itself. Let's do some alteration. Okay, done. Okay. All right, going to you, Eddie. All right, so the thing is this, I cannot deny this. Whenever I see this USA Independence Day, the first thing that comes to my mind is a certain movie, a particular movie that always it just imprints on me itself, right? How many of you know what movie is that? All right, whenever I see the US Independence Day, the movie that comes right into my mind. Anyone? I think those people who are born in my era will know this particular movie. All right, anyone? Can tell me what you think? Which movie is that? Am I referring to? All right. Yes, indeed. It's the Independence Day. All right. ID4. All right. That movie really, wow. Every year, anytime I do any MAO or market review on this day, I will always repeat this probably, but I just cannot get it off my head. Okay. So the thing is this, right? What happened? Okay. Let me now bring it to you live right now. 1 minute. Huh? Okay. Let me just, okay, on some technical problem here. Okay. Let me just solve it first. Okay. Okay. Wait. Okay, now US Independence Day, 4th of July is the day where the Americans celebrate. It's like our national day. The holiday marks the day in 1776 where the Second Continental Congress unanimously adopt the Declaration of Independence, signaling the official separation of the 13 original colonies from the Great Britain amid the Revolutionary War. All right, so this one, if you like history, you can read on it. It's pretty cool. But let's just watch the simple video on this. Let me turn on my volume. Okay, all up. Let's go. All right, pretty cool, right? All right, wow, 87% of the Americans will be having barbecue today. That's why, barbecue set in America is really very popular. Very popular, all right? And of course, today, wow, more than 70% of them will be having hot dogs, okay? So you not understand why Americans are pretty big in size, okay? Not against them, but you can see mostly are like that. All right, of course, this is to tell you more about Independence Day. Then obviously talk about the movie. Let's bring the movie in. All right, this is really the greatest speech ever by any actor, American actor lah. In any movie. All right, let's watch this. Chinese steamboat. Okay, fair enough. I buy you than that. Okay, King Hua, always a joker. All right, let's watch this. This is really my favorite. Always my favorite. Let's watch. Don't worry, it's not 2 minutes long.
Should have new meaning for all of us today. We can't be consumed by our petty differences anymore. We will be united in our common interest. Perhaps it's fate that today is the 4th of July, and you will once again be fighting for our freedom. Not from tyranny, oppression, or persecution, but from annihilation. We're fighting for our right to live, to exist. And should we win the day, the 4th of July will no longer be known as an American holiday, but as the day when the world declared in one voice, we will not go quietly into the night. We will not vanish without a fight. We're going to live on. We're going to survive. Today, we celebrate our Independence Day.
Okay, all right. I think this is really the greatest speech from an American president. All right. I think after this particular speech, many movies try to emulate the same thing. All right, but apparently, right, no one spoke better, or the scriptwriter no one done a better job. Okay, even in ID4, the second part, right, they try to do that again, but the impact was just not there anymore. Do you agree with that? Those who agree, key the word agree right now. Those who disagree, just write the word disagree. All right. So for those who didn't watch this movie, I seriously think that you should watch it today. All right. Since today, America stock market is closed, watch this ID4. All right. It's from Will Smith who acted this. I think it's a great movie, in my opinion. Very nice CG, graphics, and it just gives a good. It's a good movie, put it this way. Okay. All right. Thank you. Okay. Only Eddie agree. All right. Never mind. Let me continue then. Jen also agree. Thank you. All right, disclaimer as usual. Today the US market is closed. Just remind you once again the time today. So because it's closed, right? So which means that the market will be very slow. Now, of course, you may say that how come the Dow Jones, the NASDAQ, S&P is moving right now? Now, these are the CFD, the futures. The futures will be still moving until probably about 1 a.m. All right, but this is nothing to do with the spot market. So this is just a follow through of the actions from the Asia markets and stuff like that. So the Asia markets have to come off, right? The US air futures will follow through, okay? There'll be some follow through effect. So it all depends on European later on. If European also have some selling effect example, then the US futures will follow through. But this is just only because they are following the Asia indices. So if let's say tomorrow, when they come back, the American come back, and there's some very spectacular reason or upside, right? Then what will happen is that the futures, the US futures will jump upside. Okay, so you must understand this. So today, just go slow. If not, take a break today. Enjoy your time with your family members. And if not wrong, today is also Youth Day, right? Which means that all your children's at home, right? Spend some time with either your children or your grandchildren and stuff like that. Okay, all right, cool, huh? Okay. Now, because of that, you have accepted the above and identified me. Disclaimer as usual. Thank you. All right, the workers are definitely not interested. You can see very clearly that it's really people are not going back to work. But of course, we did see that the last Friday, the US non-farm payroll was really good, 850,000 jobs. So that's the thing with bye. People asking, so the jobs looks good, right? Well, the numbers are higher, but you look at the unemployment data, it's still at 5.9%. Because workers are no longer interested to work. You understand? Because they are making more money, staying at home, trading, doing other online stuff. And of course, with the COVID-19 going on again, they also don't feel like it's dangerous. So even though the Cupid, the job Cupid, tried to, dang out the arrows, but you can see that there is no interest between both parties. The employers are not interested too, because employers realize that, hey, come on, I get a robot coming in, I put it all online, it's better than giving jobs. So now we have a problem. We really have a problem that the employers are not really employing people and the workers are not coming forward. So now what happened? This will have a big problem because economy needs the worker to work and employers to continue to get more people. So if that's the case itself, right, then there's a problem. And the only way is to stop the money. Only when the money is stopped giving to both parties, when employers are not receiving any money, then they'll work harder to get more workers, and the workers have no money, they'll come back to work. So that's the reason why I'm pretty sure that the taper has to be done. If not, what will happen is that you have these two areas having problem. But that's my personal view. I don't know if you agree or not. All right. Anyway, every time, every day, I'll try to get you guys inspired by this all the top traders of the market. And this guy is called Mark Douglas. If you can learn to create a state of mind that is not affected by the market behavior, the struggle will cease to exist. I think it's a very powerful words that over here. And I think that Arun last Saturday also did remind you guys on the state of mind. Your mind basically is the most important thing. The perfect trading quote for the highlighting the importance of being a detached trader. Don't give in to pressure the market puts on you. All right. So the thing is this, the more you know what you're supposed to do, you have your game plan and you follow through, you have no emotion in this, I think you'll be a perfect trader. Of course, it's not easy, but it is really one of the very important things that to be a detached trader to be successful. All right. So we want you to be a successful TWB trader. Hence, therefore, every day, every morning, we will try to do this with you. Okay. All right. Now, there are reasons to stay bullish. There's a lot of reasons to be bullish. Today, there's also a lot of reason to be bearish. Today, it could be a lot of economical stuff. Let's go, okay? All right, so we saw the June payroll was really strong, 850,000, but not that strong enough, okay? Apparently, it's higher than the last 2 months, and it's what we call it as the Goldilocks, okay? It's like, it's 10, but not, just nice, okay? Just nice. So the stock market has climbed, that the market is telling the Federal Reserve that, hey, you know what, our jobs are doing fine, but our employment is not doing that good. So it's like, hey, you know what, you don't need to taper, you don't need to increase interest rate. We're just nice. So it was more like a pretty perfecto outcome on last Friday non-farm payroll, which kind of question mark is that it's too perfect until we have a big question mark there, you know? So the thing is this, but undeniable, these are the numbers are showing pretty good. That's the reason why the stock market is higher. So that is first reason. And of course, second reason is that the S&P now is the longest winning streak since August 2020. And of course, it's a 7th consecutive record high. It's the longest winning stretch since back then itself. And of course, it's also the most 7 consecutive high, the first time since 1997. So what I'm trying to say is this, right? The reason why S&P, this keep on going higher because funds keep on loading into some specific counters, and of course that stretched S&P now to really record levels. All right. So the thing is this: will this continue? Well, it is possible because the market has no reason to sell at this moment right now. So that is the reason why it's putting place here, the reasons for staying bullish, okay? And of course, with that happening, all right, the NFP has sent stock all the way up, hence therefore pushed the low volume VIX down all the way to below 15. Oh my God, okay? So the question people keep on asking me, Kel, is 15 what you do, sell? I said, no, my friend. Okay, buying. Yes, indeed, I cannot deny this. All right, now we look at it, we are not at the price whereby before the during the pandemic, just before the pandemic time. So we are back here itself before the pandemic time. And the pandemic time, what happened? It brought the VIX all the way to 80. So is it going to be a double bottom here, or this going to be another new low to go down to about 13 or even 12? To me, is this, my friend. I am saying this upfront. Anything below 15, 16, you just buy and just hold, put a contract upfront, option market, right? So put it in, let's say you expire it in September or October. I think that would be pretty good for you guys. All right, guys. So think about this carefully. I'm saying this, I kind of believe that we're going to see a pretty impressive movement soon, okay? Based on this level now, I kind of suspect that we'll go back up to above 20 level, okay? So I'm giving you my personal take on this. You guys decide, okay? All right, so that is my view on the VIX indicator index. And of course, this is the, okay, wait a minute. There's a PowerPoint issue again. Hold on. Okay, so, hold on. Okay, now this is something that you must take note, okay? Apparently Goldman Sachs created this index, okay, it's from Goldman Sachs, you can see that, saying that, right, if the first 2 weeks of July, usually very, very bullish. Wow, look at it. They are saying that, right, based on the last, all the records, it seems to be telling you that the July month, the first 2 weeks is going to be very, very bullish. So now we are here, and it said that there should be further upside to come. And of course, the reason July money flow are the biggest according to Q3 advisors. And it say that, right, the sentiment and positioning now is telling you that the market is going to hit higher. The S&P index gamma shows that, right, the dealers are trying to sell the futures in the rally. And of course, the year to date, the money market, now the inflow is about $160 billion. And the household now owns about 38% of the US equity market. So it seems to be like everything is very bullish right now, and the market is looking forward to go higher for the first 2 weeks of July. Now, again, this is from Goldman Sachs, so you have to take a pinch of salt over here. And of course, another thing is that the data do show that July does seem to be pretty okay. But again, I cannot verify for this. I can only say that, right, okay, since it's Goldman Sachs, I think you can give a bit of trust in there itself. If you don't trust, do your homework and you probably know the answer. Okay, all right, that's Goldman Sachs. And I tell you, the most important thing is that as long as the yields doesn't cross 1.5%, or sorry, it should be actually 1.6%, then there's no reason to worry. And of course, incredibly, the non-farm payroll data was good. So usually the yield will move up, right? Which it did. But it was just for a short moment. In the second half of the day, the market just pulled back down all the way. So it's very clear that the bonds are being bought up once again. So it seems that, right, the bonds are actually being pumped up on rational reason to bring the yield down, because the bond and yield move in a different direction. Hence, therefore, as long as the yield stays below 1.5 to 1.6%, right, seriously, there's no reason to be panicked, because that's what the Wall Street want you to remember and take note, okay? All right. And of course, look at the Bloomberg dollar index. You look at it, okay? Initially, the dollar index went up because the data was good, right? So the data was good, but the point is that the market don't buy it. And after that, you see, look at the dollar index, wow, come down all the way. So this tells you very, very clearly that the fundamentals are no longer going in line, because there's some artificial manipulation. And if that is in the market, then seriously, there's nothing you can do. So that is the reason why there's many reasons to stay bullish in the market, because the first reason and only reason is it's being manipulated. That's the only way I explain this. So that is the reason why many traders, expert analysts, they're having difficulty to explain to their clients, because they feel that, hey, how come this and this should be that? How come the market is going the opposite direction, right? Yeah, because that is what I meant, all right? When you have this manipulation in the yields, you have manipulation in the VIX, and manipulation in the S&P, seriously, you don't need to tell me, but I will know that, right? They will do also on the Forex front, okay? All right, and of course, well, that means that it's a good time to buy into gold and silver. Well, I can tell you this, it looks pretty good, but I cannot deny this. If there's going to be any pullback, it will be welcome, so that we can buy like this. I prefer to see something like this to buy, but anyway, we already bought it since 2 days ago. So we're looking at to hold on this position. But once the gold can cross 1,008, I think about the futures price, 1,008 effectively, all right, we should be able to go much higher. 1,008 is here. This now goes to 1,788, right? If gold can cross 1,008, right, we should see higher level. Now, silver is still staying above $26 right now. So anything higher will be good, okay? All right, so I believe that gold and silver will be going up, but a pullback will be more than welcome, okay? All right. Okay, hold on. Wait a minute. Something went wrong. What is this? Will be more than welcome. Okay. All right. Okay. Okay. All right. So with that, that will be the thing. So on the second half of the MAO later on, I'll talk about the S&P earnings. We talk about the GDP and ISM. We talk about the CBOE Skew Index versus FX versus S&P, and the potential technical dates that I'll be sharing with you from another person. Okay, so you guys want to stay tuned, all right? All right, so Susan go live. Remember this, she'll go live every day, but today she will take a break because today US holiday. It's pointless for her to go online. So tonight, she will be off, okay? So tonight, she will be off, okay? So don't stay tuned, all right? She won't be coming online, okay? All right. Now, it was a great success, huge success on last Saturday. Thank you guys for all the support, right? Arun really covers everything here. So I think he did a fantastic job. Now, someone did ask me, Cal, can you get Arun to do another similar one like what Benedict did back then? It's like to share about it in a closer level and, sharing more stuff. Well, all I can say is this, I can try to ask him, but whether he's okay with that or not, right, that's another. So let me see how it goes. Okay, Arun, you heard me, Arun? Are you online? All right, there are requests of you, to share a bit more and stuff like that. Okay, so this is what the crowd wants. So I will talk to you on the side later, see how it goes. All right, it was a very good one. Arun's a great natural. In fact, Colin, the videographer, say that, wow, Arun very natural, right? He just, fit the camera perfectly. Okay, so that is cool. Thank you guys for all the support once again. Now, in terms of news right now, okay, just a moment. Okay, in news right now, right, Singapore, pretty good, right? We have only one new locally transmitted COVID-19 infection. That is fantastic. That means that we're going to see our 5-packs dying soon. I think that will be the thing that everyone looking out for. All right, so all is good. So Singapore doing a great job, but apparently in UK, it's not doing that great. In fact, some scientists are saying that, right, this is like building a variant factories, all right? But seriously now, the UK PM Boris Johnson is going to set up to open up, okay? Really open up. So I just only have to say that, we just keep ourselves safe. That's more important. We let our government decide what to do later on, okay? Now, I need to take this away because apparently some people ask me how I get this data. So I'm going to go live for you right now to do this live, okay? So you go to this particular website called investing.com, okay? There's this thing called calendar, okay? Economic calendar. You click on it, okay? You come out something like this. Okay, first of all, you have to go to the filter. Okay, now there are always these countries. So to me, is that I'm not interested in all these countries, so I'll just take them all out. Okay, you can do it for yourself. Go investing.com. Okay, take all this away. So that's only America, right? Okay, then after that, I choose the importance, the 3 stars, and then I apply. Okay, then I apply. Okay, once I applied, you can see that you go today, right? You just change it to this week with all the important data. Then of course you want to choose the time. You can choose the time to Singapore time so that you have this Singapore time. So GMT +8, Singapore, press. Okay, then voila, now you have it in the the time frame you want and stuff like that. Okay, that's how I always do it and update you guys. And once it's done, I'm gonna just put it in right now to go live to update you guys right here. Hold on. Okay, so done deal. So giving you a live coaching here. Okay. So with that, that means that you guys can, oh, sorry. Oh, no. Okay, so you have this US Independence Day today. All right, and now we have is tomorrow, we have the ISM non-manufacturing PMI. The numbers is 63.5. So we'll talk about this more tomorrow. Okay, we let the market rest for today. Okay, got it? Now, last Friday, we saw the Dow Jones went all the way up. So there's no holding back. You can see that very clear. The market loved the data. And of course, market closed near the high. Now, let's look at the data's information. Well, first of all, we have the so-called accelerated recovery we're having it right now. The broad-based index is up. S&P is up. Dow Jones up. NASDAQ is also up. So everything is up. Okay, so all is good because of the string of economic reports and of course the non-farm payroll data that I just mentioned earlier. And the news side now, because it's holiday, there isn't much news, but all of them basically says that, okay, after the Independence Day, there should be higher upside, okay? So that's what happened. Now let's just recap on what happened on Friday. Let's take a look right now. Now Friday, perfect, look at it. Opening price was just marginally above the pivot 2 level. But the KSI was green in color, so you know that the upsides could be KDR +1 to KDR +3. And the low of the day is 34,605. Now look at it, our pivot 2 was 34,596. So it seems that the market, we can really mostly know where's the potential low. And of course, if the market stays above OP, CCRY will be a buy because the KSI of the day chart is green. So you have to follow through. And of course, you will know that it may go to 34,764, which the Dow really went up. So all this thing tells you that as long as you follow the indicator of hours, you should be doing fine. And truth be told, let's take a look. All right. The market has been stabilizing all the way until the non-farm payroll data comes out, right? Now, what you see is this guy is a BMB, the red candle, then it's a CCRY, and of course, what happened? The market really goes up. Okay, now, of course, there was some pullback, but if you put a stop loss properly, it wouldn't be triggered. And if the market comes down, it's a touch OP here, triggering OP, CCRY, you buy, and that's how the Dow goes up. So this is really incredible stuff because you can see at the back, right, all the KSI have been green. So that means that the boys keep on coming by. Now, take note once again, look at it. When the price was coming down like this, okay, you can notice that when the price came down, right, the market just couldn't go down. The KSI stayed green. This is the most important information. If the market comes down, but the KSI stay green, right, once the market break out, right, you can see that the market goes up. Now, breakout technique can be any like lower high drawing or any triangle drawing, but as long as you realize that whenever the market is coming down, but the KSI is green, any breakout will be a buy, especially if the day chart is green also. That's the reason why this was a point whereby I suspected that the market will be going up. And of course, with the zebra formation, it even confirms it. Okay, all right. So that is what happened on the Dow Jones on last Friday. Okay, last Friday. Okay, so now let's look at the market now, because today, as I said to you today, the market is closed. So there's isn't much to really talk about, but I'm just going to share with you the general overview, okay? All right, let's take a look. Okay, now the Dow Jones now is trading lower, Dow futures trading lower because of the low volume trading time. And again, I repeat, today is a holiday. So this movement is probably due to the Hong Kong market. As now was down earlier. Hong Kong was down earlier with China. I'll show it to you in a short while time, and that causes the movement to come down. So in short, at the moment right now, right, there's something to just take note. There is a very interesting PTP student will know there's a very strong resistance at 34,803. Okay, I write it down for you. 34,803. Now, those were PTP students. I did remind you guys about this on last Friday. And you can see that the market touches it and come back down. Now, it happens already once here and once here. So this is like third time already. This is the first time, the second time. This is the third time. So will the market now test it for the fourth time? Well, we won't know. But since it tested, right, now what happened is that in a previous incident, when the market tested 34,803, the market does pull back. But every time it pulled back, it hit the MA30, it rebounded. Can you see that? It come down again, it rebounded. So we are now, the MA30 is quite far away. So there is a small possibility, smaller, that the market may have to come down to the MA30 again before it rebound again. I don't know, but it is possible, right? So that is one way to look at this 34,803. The MLP for today is somewhere near here, which is like going to hit MLP today. So if the market stays above the MLP, we're going to go higher again. So it is pretty clear that, right, the Dow Jones now, you look carefully, this high here is 34,825. Now this guy here is 34,842. This guy is 843. So 843, 842, and this guy is 825. The low happened, the high happened to be slightly lower than first two. So there is some form of downside pressure at the moment because you are looking at the market, right? So there's some potential downside movement. Okay, just give me a short moment. Let me return a text message here. Okay, thank you for that. Okay, so this is what is happening right now. So take note of this 34,803 level, okay? Okay, all right. Weekly chart wise, well, you can see that the market really did a great job. I told you last Friday that if the market can stay above the opening price, we're good. So it really did that. But the only thing, and it stays very nicely above the the shorter trend line. And by only thing, it got resisted on a major trend line. So unless the market goes up and break all-time high, then we are back into the trend that I said. Okay, so a bit of uphill task at the moment, but as long as it stays above the short-term trend line, still looks okay. All right. Now let's just look at today's market. I say today I won't be advocating you to do anything because I say to you today should be a rest day for all of us. Okay. Okay, let's take a look. Now for today's, the Dow Jones, okay, like I said, try not to really engage into trading. If you insist, then just go slow, okay? Now the opening price today is actually slightly above the pivot 2. 34,758 is a pivot 2. The opening price 34,777, okay? So if the market goes below pivot 2, by ideal, right, CCYR is a sell. But again, today is a holiday, low volume, so be very careful on this. And also the KSI happened to be green in color, right? So to sell is not wrong, but just go slow, okay? Meaning expectation goes slower in terms of TP, then in terms of size also goes slow, okay? All right. So if it stays down, then of course KTR -1 to KTR -3 is possible, but because the KSI is green, so go for KTR -1. I think it's jolly well good enough. Okay, so let's just take a look right now on the intraday movement. So you can see that actually it's very, very slow movement right now. So if the market really goes down, really goes down, then okay, hold on a minute. Then of course the downside, the most is about KTR -1, and that's 34,640. Okay, so that is what I'm seeing on the Dow at most. Okay, 34,640. Okay, and because it's KTR -1, this could be a good price. Look out for any potential CCRY. Okay, all right, to buy. Yes, of course. But of course, you may say, but Kel is below period 2. Yeah, that means that you have to go slow with expectation. Okay. All right, if you because I'll say sell because but today is a low volume day. That's why I don't want you to be caught. Anytime the market can swing you badly. Okay. All right, so be very careful on this. All right, although technical is technical, but if the market is not there, that's really pointless. Okay. All right, NASDAQ. Now the NASDAQ continue to go new high. I already told you guys NASDAQ will go new high, and incredibly the BNB really makes itself felt. Okay, look at it. This is the range of the BNB, right? This you can see the BNB on last Thursday. The range is about 137 points. So you look at it now from the high, it went up by 137 points. I think so, almost there. 137 points, 14761. The high is about 744 at the moment. So 20 more points to touch the BNB 1x1. All right, it is really possible for it to happen. Okay, so for today, I will just tell you this upfront. By right, okay, by right, the NASDAQ now is really overbought, way overbought. But I say as long as the market just wants to buy, sorry, my friends, there's nothing you can do because you can see that they're just buying all the FANGs counter just to push up the S&P. So for today, it's very clear that as long as the NASDAQ stays above the MLP, which is about here, about 14620 level, as long as they stay above the MLP, there's no reason for the market to come down. Now, this is the MA30 is very far away, so it's very bullish, okay? At the moment now, very bullish. If you look at the NASDAQ right now, the NASDAQ is now hovering beautifully above the pivot 2. Well, it's between the pivot 1 and pivot 2. So as long as the market stays above OP, is good because the KSI is still green in color. So no reason to sell. And of course, today's a new CCRY on a day chart. So everything looks positive at this moment right now. Okay. The only thing to watch out for is a new TSCB being formed on Friday. Hence, therefore, the latest TSCB tells you that the NASDAQ has a very important support at 14,536. Now, TSCB is only available for PTP students. So PTP students, if you have this TSCB, you must take note of this number, 14,536. Okay, last one, S&P 500. S&P 500 now is coming off a little bit because the Dow Jones is off, but it's still way, way, way above the MLP. So again, no reason to be worried. The BNB already given the profit 1x1, so it's done deal already. So all looks pretty good at the moment right now for S&P 500. Okay, maybe some profit taking is a good idea, but we are still very far away from the MA30 and we are even further away from the 95% level. So with all this, this tells you that the market at the moment now is pretty bullish right now. Okay, so we look at the next S&P 500, the day chart. Now S&P day chart looks similar to the Dow Jones. It's trading below the pivot 2 right now. And of course, below OP, below pivot 2, it's a natural to sell. But again, KSI is green, so it's going to be tough. Maybe KTR -1 maybe. And of course, again, today no trading. So it's another question mark here. All right, so go slow on this. Okay, all right. So look at the 15-minute chart, S&P 500. If there's going to be any rationale to sell, then of course, the KTR -1 is here, and that's 43.35. So now it's 43.46. So if S&P goes down, I suspect around here, 43.35 will be the level to consider to buy back some of your short position if you insist to short today, based on the rules of below OP and below pivot 2. Okay, let's look at Hong Kong. All right, now before we look at Hong Kong, let's look at China first. China is down, continue to be down. And I've been saying this, China most likely you will see going down lower. And my target is still here. And that's 16,685. I've been saying this for some time, right? That is the level that I'm watching out for. Okay. Then of course, China, Hong Kong, just now this morning traveled down all the way below 28,000. Then after that, very strongly, it rebounded back above 28,000. So now it's kind of flat on opening, but it's a gap down. And do not lightly is because you can see that the closing was on Friday was below the MA 200, though this could be program selling that came out just now, all right? So of course, program selling means that either that the boys are buying back up to take advantage of the stop loss, or later on in the afternoon, we may see some more profit taking or coming downwards, okay? We'll see how the market react later on, okay? All right, so that is what happened in Hong Kong right now. Okay, for Hong Kong chart, let's take a look. Okay, this is the Hong Kong day chart. So this morning, it opens above pivot 1. So by right, above OP, above pivot 1 is a buy. But once it went below pivot 1, any CCYR is sell. But because again, the KSI is green in color, right? Although the market is coming down, right? But the KSI stay green. And the KSI stay green, then basically it means that, right, the market will be able to buy out whenever it comes down. So you look at the 5-minute chart, you will see beautiful. Look at it. Oh my goodness. This is why I love my indicator. You look at it. This is really incredible stuff. Look at it, my friends. All right, the opening price is here. It goes down below pivot 1 and then it crashed down all the way. But look at it. KTR -3 and it stopped there. Oh my God. Think about this. This is really insane, right? How can any market indicator be able to predict something like this, tell you that where could be the base? And we know that the KSI was green in color, right? So because of that, the day chart KSI is green. We know that usually it will stop around KTR -1 to -3. And look at it, it stopped there beautifully. Oh my goodness. And then after that, it rebounded like this. Oh my God. So imagine, guys, if we have this indicator and it's in the hands of these people in Hong Kong trading, right? Would they love this? I think they'll love this to bits, correct? That is the reason why, there's so much avenue we can go. We can go so far, so deep, any part of the world, as long as we just make sure that people understand and know how this thing works. They can really find all the lows and highs of every single day. This is really incredible stuff. Look at it. Oh my God, really. Okay, so guys, this is why I say you need to learn your TWB system very well. Okay. All right. So that is the Hong Kong market. Let's look at the DAX market right now. Now, DAX is definitely having a bit of congestion right now. Let's make it a bit bigger. Too congested already. Okay. So of course we have the Let's take this all the way. So the MLP for today, we have it is somewhere near here, and that's about 15,643 level. And the MA30 is very nearby, and that is about 15,623. So which means that as long as the market stays above the MA30, 15,623, the market is kind of good, okay? It's kind of good. So DAX could now again challenge, okay? Again challenge this level here, the level that I mentioned, and that's 15,747. Now this number, I've been talking about this for a while already. As long as NASDAQ can stay, DAX can stay up above the MLP today, the DAX could challenge again 15,747. Okay, all right, that will be the DAX. All right, so last one will be Nikkei. Now Nikkei is coming off, and something to take note of, Nikkei is trading below the MA200, is definitely below the MA30, and MA30 has loses strength over the last 3 trading days. Today, the 4th day, so it doesn't look good. So there is a possibility for the Nikkei to trade lower. Now, because there is a BNB right here, that's why it's a BNB right here. So if the market goes below the SL or this BNB, it could jolly well go lower, okay? So Nikkei traders, please watch out the BNB SL level here. This could be a strong support, which you can buy. If it comes down here, you may support and go up again. If it comes down, then it may go down to this point here that I mentioned earlier. Okay, all right. All right, so if everybody is cool with this, please key number 3 right now. Let me see whether you guys are sleeping already. All right, today I can see the numbers about 60. It's kind of low for today. Likely everybody is taking a little break today. That's good. All right, it's good. It's good. Know that you guys are not trading much today. So when I see the numbers on MAO is low, that means you guys are taking my advice to go slow today. All right. So if you're still around, right, let me just double check. Are you guys still around? Then of course I can, see that you guys are not sleeping. Today is a good day anyway. I'll take a break. Okay, thank you. DAX has a zebra on the daily chart. Oh, well, let's take a look. Oh, right. Yeah, indeed, yellow. Yeah, indeed, DAX is a zebra, correct. So since on DAX, I might talk about this. Okay, so how do we read this zebra? So this is the yellow, red, yellow, red. Okay, so yellow, red, right to left reading. So this is the highest point. Then naturally, this is the lowest point. Okay, so with these 2 points as that, then I redraw this for you. This is the highest point. This is the lowest point of zebra. So which means that this is entirely is the zebra range. Hence, therefore, okay, let me clear off this picture a bit. Need to do some editing on the chart. Okay, now I'm squeezing the chart down a little bit to show it to you the impact. So what I'm trying to say is this is the high. Oh, sorry, let me change the line. Okay, this is the high. Then, of course, this is the low, which is a BNB, interestingly, as the pivot 2. All right, put it there, just to show to you the indication of it. So the high and the low is a range, right? So this entire range is about 297 points. So which means that if the market is to go up, it will go up 297 points. So it means that there is a possibility for the DAX to go to 16,056. 16,056, okay, here. Okay, now of course at the same time it may also go down, right? Okay, 297 points. So we're talking about this point here, down all 297 points, somewhere near here, 15, 15168. Okay, around there. 163, sorry. Around here lah. Okay, so you can do it properly, but my point is this: once the market can cross this point here, which is the zebra high, then the DAX can go all the way to 16,050 levels. Okay, but on the flip side, if the DAX do come down, then DAX can come all the way down to 15,160 levels. Okay, so we have two range for you guys. Okay, guys, traders. So watch out for this. DAX can go to either way because it's a zebra formation. And I tell you this, zebra, whenever you see a zebra, the chance of making money is very high. So traders who want to take advantage of this right now, they can try to buy and go buy towards this point. For traders who want to think that the market's going to come down, they can sell and aim it down here. Okay? All right, cool. Right. Thank you. Who's on to ask that question? Let me see. Andrew, thank you very much. Good job. All right, thank you. All right, this is cool. Okay, thank you, Andrew. Okay, so we have come to the end of this part here itself, which is the index side. Okay, you guys have understand how to draw zebra. Next time you can do it. Now, this zebra high-low range is only for day chart. Okay, don't put it in any other time frame. It may not work that well. I tried before, so the result wasn't that beautiful. But for this day chart, it's very good. Okay, so DAX trader, you should in for a good ride. Okay, so let's look at the gold right now. Gold, basically the gold CNBC chart is spoiled. Cannot see the daily movement already, so I'm gonna skip that part. So gold day chart now, well, traders are really going into feel that there's a lot of resistance on gold. That's why they are not going to buy too much gold. All right, that's the only news I get. But I don't really agree with what the boys are saying. I mean, the media saying, because we do see a CCRY that formed, and now we are already in profitable position, right? We bought gold about 1778 level. Now gold is at 1787, already up by $10. That's a pretty good, right? What we do is we just do a CCRY on the buy on the gold market, because there's a day chart, and to inform us, we know that the KCX is also there. The blue bars are retreating a little bit. The KSI is still red. That means the boys selling pressure is there, right? That's why you can see the gold have a bit of selling pressure at the top. But as long as gold can stay above 1778, which is the entry price for us, all right, gold should be able to go up to about this point here, about 1811, which happened to be the KCB level. Okay, it's also chocolate bar because it's basically unused. Okay, 1811. So traders can consider to buy gold towards 1811 level. Okay. All right, so let's take a look what happened on Friday in the gold movement. Now we know that the KSI is red, right? So the upside become limited. So what happened is that the market was sideways. Then after that, it found strength at the KCB level, and this can do a CCRY, tries, hit pivot 1. Then after that, it come back down. But when trying to go up again, now this guy is a BMB and it's a CCRY. It triggered the OP. It triggered the KTR +1. It triggered the pivot 1. So it was a buy right here. And of course, you buy it straight away, you're up by $6 profit. Okay, $6 is quite a bit of money, right? But because the day chart KSI is still red in color, once it basically hit the KTR +2, it couldn't stay there, did a CCYR. That's why the price of gold came back down. But what is nice is that towards the last part, the market did a zebra at the back again. And again, the KSI turns green, and the best part, no blue bars at the bottom. That's why the market goes up again. So this tells me that the market seemingly want to buy up, not what the mainstream media say want to sell, right? So I still believe that gold could be a good buy in the coming week, as long as you follow the rules. Okay, so let's look at the gold market, shall we? Now this is the gold market. All right, give me a minute. There's some text from my parents. Just give me a short moment, please. Apology. Okay, settled. Okay, guys, so let's look at the gold day chart first. Now, gold day chart, we must be objective, okay? Objective, let's just be objective here. Now, first of all, for gold day chart, the gold day chart, very clearly, there's a Fibonacci number at 1761. So gold recently came down, hit the 1761 and rebounded all the way up to about 1792 level. Then after that, okay, from 1761 to 1792 is a pretty good level, right? Then after that, it came down all the way. Then it went below 1761, but almost instantly the next day, it rebounded back above 1761. So this tells you like a double bottom. And of course, the RSI at the bottom also show that indication. And what happened? Straight away, the gold price moved up again. And when this time go up, right, it went above the 1792 level. That shows that the market wants to go higher. And at the moment now, it's still firming itself above 1788 level. So overall, this tells me that gold should be going up in the near term. Now, of course, what you can see is pretty clear now. We have the moving average now. The MA 30 is now going below the MA 200. Now, actually, this means what? Now, when the moving average is doing this, actually, this means that this is actually a death cross, right? All right. So, but the thing is that this death cross, even it happens, the market got no reaction. Do you notice that? Right? There's no reaction. Right? Even though there's a death cross happening right now, the market actually reacted by buying. So basically, right, all this tells you that the market is really not that bad at the moment. So pretty clear that this actually means that there could be higher upside soon. So I'm going to still tell you that based on what I'm seeing on the conventional, 1811 should most likely be happening in the near term. 1811 should be the one happening in the near term. Okay. All right. Clear on this? All right. Okay. So with that itself, right, of course, just to play it safe, those who enter already on the day chart, do put a SWL just to protect yourself, okay, in case anything crazy happen. Okay. All right. The weekly chart also looks good, so no complaint, all good girl. And the silver chart also looks good. The silver chart found its base above the MA 200 and now it's challenging the MA 30. So if the silver price can go up, it can go all the way to above the $27 mark. And I did say I will love to buy silver at any price below $25, but at the moment now, it seems like it's getting away from us. So for traders who want to chase in to buy some, you can try to, but don't go all in because I still think that there could be a nice pullback for us to buy at a lower price. Okay, so my wish list is that I hope that the price of gold, silver hit down here, come back down. This will be a good price to buy. 25.60 will be good. If you can go down a bit lower to about $25, that will be the fantastic one. But if not, then after that, we're looking to see silver trading, then you may go higher in the later months. Okay, so traders kindly take note of this. That is what I see on the silver market. Okay, all right, let's look at the gold day chart right now to understand this better. Now, gold day chart opening price is between the two pivot, but the KSI is red in color. So if it's red in color, that means that the sentiment is still more on the downside. Blue bar is still available, so selling pressure is here. So, but because it's a CCRY and it's between two pivot point, I kind of believe that later on the gold may test 1,800. 1,800 happened to be the pivot 1 level. Now, if you look, remember this number 1,800, and if you change this to the 15-minute chart, you will notice that, okay, the 1,800 is over here, and because KSI is green in color, so if it goes up, red in color, so the maximum we can see for today could be 1,795. That is the KTR +1 level here. But of course, on one condition is that it must stay above OP for it to trade higher, okay? All right, but you can see now no blue bars at the bottom. KSI is green, so at least looks good. But don't forget again, today US market is closed, so the momentum, the movement now is all pretty low volume, okay? Very low volume. Okay, all right, so that is the gold, silver. Silver day chart looks very nice. It looks very, very good. Like I see silver, CCRY, with those who bought silver, we have bought about $25.90, and now it's already $26.55, so it's already in profit. And the KSI has turned green, blue bars have reduced. So silver is really on the uptrend movement. Looks pretty good. So silver could now be testing $26.68. So if silver can go higher, the first barrier will be at $26.90. That is the KCB level. If we can cross KCB, wow, it can go all the way to $27.64. Now, all these are very good levels here. Do also may say, but it's like in cents form. But don't forget, no, the silver is in dollars, in like tens of dollars. So a rise like this itself, right, is kind of like 2 to 3% already, and you should actually utilize this and make money from this. So I repeat myself, I still believe that silver is a good buy. I still see that going to $38 to $39, okay, in the long run together with gold. So if gold can go to 2218, all right, I believe that silver will go to $38, $39, okay? So currently now gold is trading at 1788 current price, and silver now is 2650 lah. Okay, all right, so you can do the simple mathematics here to understand why am I seeing silver to be going to $38. Okay, not directly related because of the momentum also, but at least I dare to tell you this is my view lah on the 5th of July today. 5th of July, I'm saying that right now. Okay, now how long would that be? Well, I think it's by latest March 2022. Okay, latest March 2022, we should be able to see gold hitting 2218 and silver going to $38. Okay, okay, of course, disclaimer as usual. Okay, all right, so I covered this. Now I look at crude oil right now. Crude oil. Now this is crude oil. Crude oil is still firming itself very nicely. Couldn't go down. It's above MA30, but of course it's a bit of stretch at the moment. So that's why the MA is showing us some form. So if crude oil do come down, if there's a chance for crude oil to come down to the MA30, it will be good, because the last time we saw this, if it came up for a short while, 2-3 days later, it propelled higher again. So of course, if it come down and then still stay down a bit, then propel, we should see going up again. Okay, all right. So that is my view on this crude oil. Okay, all right. So I come to the end of today's part 1 of the MAO. So if you guys want to stay tuned for the part 2, right, give me 15 seconds. I'll come back. Okay, 15 seconds. Okay, thank you. Okay, guys, I'm back for the second half of the MAO. Let's continue. Now, this alternate market view. So we're talking about the bearish side of the market. Okay, now, first of all, this is the risk divorce. Okay, this is oil and S&P co-relationship has turned negative since 2017. Okay, so how to explain this? Look at it itself, right? Okay, the top line here, okay, is obviously the CO futures. Okay, the crude oil futures, and the blue one is the S&P. Okay, all right. So actually, I've been telling you this, that the crude oil futures, the crude oil price movement and S&P actually go in tandem, which a lot of people don't buy it, but actually it is like that. So what it's trying to say right now, right, you notice that, okay, their relationship now is getting further and further away and now has become a negative number. The last time we see a negative number, we saw something like this, okay, which is back in 2017. But that doesn't mean that, okay, that it will be a problem, because you can see the S&P also continue, I mean the crude oil continue to go up and S&P also went up at the same time. So it doesn't really tell, but it's just that long haul, it will create a problem, and this negative relationship itself, right, will eventually bring down the stock market down. So actually, this thing tells you that traders must be very careful, because we know that when cost increases, it's not a good thing. So this is the core relationship between the S&P and the crude oil price. Okay, so it's the first time we see this. And again, last time we saw something like this, the market did go higher before it came off. Okay, all right. Now this one is much clearer. This is the gap between the CPI and the PPI, indicating that the companies now are retaining inflation. So what you're seeing right now, you can see every time when the the spread of the PPI and the CPI data go ballistic, right, the stock market usually will have a pullback. But apparently now, right, this is so crazy numbers, but the stock market is still surging. So it's just like telling you something is actually very wrong and things may get very dangerous. So that's the reason why I look at it. So you can see that the market now is questioning how come with such a movement right here, the market is staying put, because of course, when the Federal Reserve is pumping so much money, people cannot see the real truth of the matter. All right, so this guy, Leon Copperman, he is pretty good. He's a billionaire, and he's telling people that, right, the market now is really, really, really wrong. He doesn't know how to put it in what way, but it's definitely really the structure is having a problem. Let's watch what he says. I'll get a quick one here. Okay, I think as usual, when I have some PowerPoint issue, this thing will happen. So I need to unplug to hear this. Just give me a moment, guys. I try to unplug for you. Just give me a moment. Okay, don't worry. Let me just get my bearing in a moment. Okay, hold on. Okay. Okay, let's try now. Let's hope all is good.
You all know Lee Cooperman. He's a friend of Squawk Box. He says that he is a fully invested bear right now. I spoke to him at the CNBC Financial Advisor Summit for his long-term view on the markets. The Omega CEO says that while you have to be in the markets right now, he's nervous, and there are a long list of things he's watching.
I would watch the dollar exchange rate very closely. I would watch Fed speak. I would watch economic performance. I would watch the craziness in the market, Bitcoin and stuff like that, the meme stocks, the speculation is taking place. The market structure is like totally broken, and we're not spending any time. The way stocks trade is very unnatural.
Lee's got a lot of opinions, but there are two things right off the bat that he feels very sure about.
Two things I hold very strongly in terms of views. Number one, I wouldn't touch a U.S. government bond with yields at currently 1.48%. I think it's ridiculous. And number two, I have a strong feeling the cycle we're going through won't end well, but I have no idea where it ends.
Okay, so from what he said, one thing that just now I caught my attention. Don't know if you caught it just now. He said the meme stock. Do you know what stock I'm talking about, right? The meme stock, right? The stocks that's going crazy now. All right, the thing is this, Lee Copperman, he say that, right? First of all, he will not buy the bonds. Of course, I mean, seriously, who will want to buy the bonds at this price now? Because the bond price is really at a very high price. And the yields is at 1.4, 1.5%. It doesn't really make a lot of sense. Okay, that's the first thing. That as a fund manager, I don't think it makes any sense here. Number two is like regarding about the current structure now. Indeed, you can see that the numbers, the data, the economic data is terrible, but still, market still is still buying up. Because why? The Federal Reserve is the one pushing it up. So for this guy, he's already this year, it's like, how old is he? 78 years this year. So he's still going on. All right. All I can say is this: if you trust that being an American investor who's a billionaire right now, then I think that you have to have faith in whatever he says. All right. So you make your own decision. Okay. All right. Now, because you can see now we're having a problem here. You look carefully. This is the S&P reported annual earnings. So the orange one is the reported annual earnings. The blue one is the reported earnings year-on-year percentage change. So what I'm trying to say is that now these are all the projection, and it seems to be telling us that, right, the Q4 2021, we should see a peak in the market. And moving forward, right, the number might be coming down. So basically, a lot of analysts are saying that they know that the most you can see is by Q4, the earnings should peak. So if let's say everybody knows that Q4 will be the earnings will peak, then likely Q3, which is now, they may take profit soon. That is what I'm trying to explain over here. So traders, you must understand, market always buy on expectation. They sell on hard facts and figures. So that is the one thing that I need to share with you. And of course, this is the quarterly annual rate. You can see that although we are doing okay, but it seems to be the estimates are not getting higher, and in fact it's lowering. So again, that confirms that the traders or investors must be very slow as we approach this coming third quarter and fourth quarter. Now we can see that the manufacturing activity has already peaked. All right, and of course this has a very direct correlation with the S&P 500. So if this has already peaked, right, the manufacturing indices has shown its peak. So of course the earnings will go down soon. And if the earnings going to go down soon, I think that any expert will know that it's time to actually look to unload off the market. All right, and of course, this is the CBOE Skew versus the VIX versus the S&P Skew over VIX versus the S&P 500. So you can see that this is now showing you is way above the 100 marker and increase the perception of risk for future or later events. And now it's 143, okay? This is way, way, way above the moving average. And the thing is this, whenever the market goes crazy at such level, you can see over here, okay, let me just draw for you some of them. You see when it was here, the market pulls back. Can you see this? Okay, so roughly get the idea. All right, so we look at something more crazy stuff like this. Then of course the market later on pull back and stuff like that. Okay, can you see the relationship? So now we are at this ballistic level, but the S&P is still firming there. Is it because the market is strong or because the market is just waiting to drop? So I'll leave it there for you to decide, okay? And this is the one. All right, this is drawn by someone else. Not this is I can't remember who is that. Apology. But based on what I'm trying to say is this: the VIX indicator seemingly is giving a bit of a triangle here. And based on triangle, all right, this is the S&P large index. Was it S&P? Okay, never mind. So this is the VIX actually, right? You can see that it's trying to say this indicator is moving in a very crazy way. And every time this triangle is being created, once it goes below it, the market will sell, which seems to be always like that. Hence, therefore, if there are going to be any projection dates, because now we are saying that if the market were to come back down over here, we can see happening on the 21st of July to August the 10th. All right, so that is what you're trying to say, because if the VIX is to pull back down and shall we lose a triangle, then of course we can see the S&P coming down. So it's somewhere around here. So this is the projection dates based on the S&P chart. Okay, so traders, you can also stand by on this. And of course, last one, the meme stocks, the meme stock. All right, Michael Burry again tell people that, right? Okay, do understand this. He sees that the meme stock now is a shades of 1999 NASDAQ crisis and 2007, the Lehman crisis. And he says that, right, sooner or later, this meme stock will go down. And because the reason is it's running out of new money. And he says that, right, this is exactly what happened in dot-com crisis, and the same leverage has been utilized back in Lehman crisis, okay? So all these are what he believes, and he feels that, right, sooner or later, this heightened demand for share will cause a euphoria movement, and of course the big boys will know how to take them off. So what I did was that on the side, I went through the meme stock, and this is what I can gather for you. We all know the S&P now is a record high, right? It's 7 days in a row. The NASDAQ is up at all-time high. The Dow Jones is just like less than 1% away from all-time high. So seriously, everything is good. But the problem with the meme stock, now take a look. This is a 1 month chart. The current price of meme stock now is trading at to $51, but the high early this month, last month, which is about 14 days ago, the high recently is on $60. So it's down by $9, where all the big market is going up, right? Then look at the GameStop. Now GameStop is even worse. It's the last high back on the 9th of June was at 302. Today is 202. Wow, 1/3 slice away. And of course, BlackBerry, it was at $15.80. Now it's at $11.99. So all this tells you that it's not good. The only one that's kind of going and bucking this is this Intercept Pharmaceutical, another meme counter. It was pushed up recently to a high of 22, but today it's about 20, so it's like 10% off. So overall itself, right, this meme stock doesn't look that good. They tell me that there are some distribution already. And if the stock market do generally pull back down, then of course all these meme stock can really crash off. Okay, so I'm not half surprised to see counters like BlackBerry, GameStop, and AMC. I suspect that they will be going down when the general market goes down. All right, that will be all for today. End of today's morning MAO. Thank you once again for staying online with me. 47 of you, pretty strong guys. Okay, do note once again today the market will be very slow, go slow. All right. And of course, later on at 2 p.m., we do the afternoon MAO. All right, this is Cal signing off. Have a great day. Bye-bye. See you later.